Welcome to another episode of On Finance. I'm Ray, and today's hot topic, gold versus Bitcoin. Let's waste no time and dive in. Gold and precious metals have always been the go-to assets to invest in during economic downturns. Gold's physical properties and scarce supply make it the first choice for a robust store of value. It has repeatedly proven to keep its value extraordinarily well during the economic downturns. This was especially true during the financial crisis of 2007 to 2009. During this period, the cumulative performance of gold was about 19%, while the U.S. equities market fell by 35%. However, a new option poses a threat to this time-honored approach to capital preservation. Bitcoin is proven to be a fascinating asset for investors and has been around for long enough to earn recognition and support and display some safe haven properties. So, could this be a mere wish from the believers of Bitcoin or a reality waiting to manifest? Bitcoin versus gold. Who is the king? Investors look out for safe havens to reduce their risk of losing money in the case of a market downturn. What assets are considered safe havens, on the other hand, might change depending on the severity of the downturn.
With all the uncertainty in our world, we are undoubtedly witnessing a flight to safety. So if you are a diversified investor, I recommend owning both gold and Bitcoin, rather than wondering which is better. You may participate if there are gains, while decreasing your exposure if anything goes wrong by focusing on areas you can control, such as your allocation. So it's very critical to diversify your portfolio.
For an asset to be regarded as an ideal store of value, it has to possess these 8 attributes. These assets must be fungible, storable, divisible, scarce, verifiable, portable, have established history, and regulated. Using these 8 characteristics as guidelines, let's compare how each asset class performs. Any asset believed to be an ideal store of value must be deflationary without an infinite supply, which is the biggest failure of fiat currencies. Bitcoin as an asset class has only 21 million possible mineable units. Imagine in a world where we have over 47 million millionaires who are all interested in buying Bitcoin. By calculation, it would be impossible for all of them to get a Bitcoin each. Gold is one of the rarest elements on Earth. The cost of exploring a gold mine and refining gold is on the high side and comes along with a tedious process. Like every other natural resource, gold has a finite supply, and there's a high possibility we will run out of supply on Earth. However, Bitcoin is rarer than gold. One of the reasons is that once Bitcoin is lost, it can never be retrieved. But gold, once lost, still has a high chance of being recovered, either by the owner or someone else. Bitcoin and gold are both divisible assets. Bitcoin can be divided into 100 million Satoshi units, named after its creator Satoshi Nakamoto, and gold can also be melted and minted into coins as little as 1/20th of an ounce or even 1 gram. Bitcoin and gold are both fungible. In other words, each unit is identical to the others. The majority of gold coin mints use 0.999 pure gold. Therefore, 1 ounce of gold is equal to another ounce of gold. Although each coin may differ in the serial number, the mints have standardized the amount of gold in each coin, so you always know how much gold is in each coin. Also, with Bitcoin, all units are the same, regardless of the who, where, or when they are mined. It is also worth noting that there are no counterfeit Bitcoins since they are immutable. And on the other hand, you can buy fake gold. As a result, this is one potential drawback for gold investors.
Because Bitcoin and blockchain, together with smart contracts, are the most significant technological innovations since the internet, I think Bitcoin and its blockchain have the capacity to transform the global financial network. So it is reasonable to believe that it may be considered a separate asset class from gold. Yet, if you compare Bitcoin to gold, you might argue that Bitcoin is the more convenient of the two to hold, since it can be accessed at any time over the internet. As a tangible item, gold, on the other hand, may be held safely in one's hand without fear of internet disruptions or hacking.
Bitcoin and gold are both recognizable assets with an established history, but gold now has the upper hand over Bitcoin. Gold has been regarded as a precious asset worldwide since the days of Noah. Bitcoin, on the other hand, has been around for 13 years. Although it is the first digital asset to succeed, it still has a long way to go to match up with the gold's reputation. Furthermore, Bitcoin's value at risk, VAR, has been substantially higher. This means that during any given week or over the past 2 years, investors had a 5% chance of losing $1,382 for every $10,000 invested in Bitcoin. This is almost 5 times more than the VAR for gold.
Can Bitcoin be the digital gold of the future? Well, it depends a little bit, but yes, in the long term, absolutely. Is it the same as gold? No, it's differently correlated to the markets. It can be a safe haven currency in the future for sure.
Although Bitcoin is closer to an ideal safe haven than gold in terms of properties, before Bitcoin can replace gold as the ultimate safe haven asset, some underlying factors might stop it. It is worth noting that the central banks in the world hold over 33,000 tons of gold, which is 20% of the total gold ever mined. Central banks and governments will not sit back and watch Bitcoin take away the centralized power of making monetary and financial policy for the people. Therefore, they will likely implement policies and regulations to keep Bitcoin in check.
Can Bitcoin replace gold as the new safe haven? My feeling is probably not. A lot of criminality, money laundering is now being used through cryptocurrencies like Bitcoin and other mediums of computer exchange. And I think that with the US, the UK, other countries starting to introduce regulation, they'll take the fun out of cryptocurrency. China has already banned the currency, and in this current situation with Ukraine and Russia, one has seen the flight to gold and the cryptocurrency, Bitcoin in particular, lose in value. I don't see a future for it as a safe haven currency.
The issue of Bitcoin being a threat to national security and a tool for money laundering has always been an excuse for the government and banks to go after it. After these questions are raised, we see Bitcoin prices react severely to such news due to its high volatility and speculative nature. Also, the conflict between Russia and Ukraine has raised international concern that Russian oligarchs might use Bitcoin to avoid sanctions. Besides, Bitcoin is not a green asset, as it requires a large amount of electricity to mine, and we all know that coal power stations currently do supply a large amount of energy needed. Bitcoin has no other use apart from being a hedge for inflation. It can barely compete as a currency due to the slow transaction time, so we have little or no use for Bitcoin outside of being another safe haven asset. On the other hand, gold is used for making jewelry and ornamental designs and has many industrial and scientific benefits. While some governments are making policies to guide the trading and use of Bitcoin, and countries like El Salvador are making it legal tender, we expect to see the acceptance of Bitcoin increase over time. However, some of these issues can be resolved when the governments and banks are positioned as players and not victims in the Bitcoin revolution.
I would say gold has always been a safe haven for wealth, and Bitcoin may certainly become one in the future, but it is now too unpredictable to replace gold. Instead, let us think of Bitcoin as the technology of the future, which is closer than you might think.
Perhaps Bitcoin might replace gold as the ultimate store of value in the future, or become the internet's currency, allowing for safe and secure transactions. And that's all we have for this episode of On Finance. Make sure you stay up to date with all sorts of financial news using our social media channels, and maybe support that future financial investment decision. I'm Ray. I'll see you on the next episode. Thank you.